you, and over to you, sir.
Thank you, Lizanne. Good morning, everyone, and welcome to the Aster DM Earnings call for the quarter. First, I would like to thank the Aster DM to give us the opportunity to host the call. Now, just introduce everyone from management. So, today the company is represented by Dr. Azad Moopen, Chairman and Managing Director, Ms. Alisha Moopen, Deputy Managing Director, Mr. Srinath Reddy, Group CFO, Dr. Harish Pillai, CEO Aster India, Mr. Amitabh Johri, CFO GCC, and Mr. TJ Wilson, Director. Over to you, sir.
Hi. Good morning, everyone. Thank you for joining our financial year 22 quarter one earnings call today. We start the new financial year 22 with more positive sentiment and hope that as the pandemic seems to be coming under control. While the new variants are creating concern with new waves and lockdowns across the world, looking at performance of quarter one year 22, we feel a lot more confident and sincerely hope that the worst is behind us. The light at the end of the tunnel is the active vaccination drive going on in the world. In UAE, where we have large part of our business, the infection rate has stabilized with majority of the population now being vaccinated. In fact, UAE is one among the most vaccinated countries in the world now, and life is almost back to normal. In India, however, the vaccination drive has not been that active to start with. The second wave that happened during quarter one led to restrictions in many parts of the country, including states like Kerala and Karnataka, where we have large part of our business. However, I'm happy to inform that this didn't have an impact on our business performance compared to previous quarter and the quarter one last year. Our performance in India has been quite robust. In our continuing battle with COVID, we had set up 2 field hospitals in Calicut and Kochi this quarter to cater to the requirement of the patient. Aster is also actively involved in the vaccination drive across all major hospitals in India, and during the quarter, we have administered a total of 3.8 lakh doses of vaccine. The GCC business is back to pre-COVID levels with good traction in the first quarter, which is usually a lean quarter due to people traveling out of GCC. We are happy that large number of our doctors and their families in UAE have been provided with long-term residency for 10 years as golden visa. In fact, nearly 400 people and their families, which will increase their commitment to be in UAE as well as attract more healthcare professionals to the country. Another important thing is the conversion of our business to 100% ownership, and this is also almost complete, giving much more structural and legal stability. During the first quarter, we posted a revenue of 2,372 crores, which is an increase of 36% when compared with the same period last financial year. The EBITDA in quarter one is 281 crores, an increase of 97% when compared with the quarter one financial year 21. The profit after tax post NCL for quarter one is rupees 44 crores compared to the loss of 83 crores during the same period last financial year. I'm happy to report that India part of the business is going up year on year. We are pleased to let you know that India share of revenue to the total revenue has now gone up to 23%. And as you know, this was around 11% some years back, and gradually it has climbed to 23%. The revenue from India operations has gone up by 84% to rupees 550 crores, and EBITDA increased by 460% to rupees 71 crores year on year. The focus going forward as a strategy is to expand capacity in India to the existing capacity beds of 3,757 beds in India. An addition of 411 beds is being planned in the next 18 months. This includes the addition of 60 beds to Aster DM Hospital in Kolhapur, 276 beds in Bangalore Whitefield Hospital, and 75 beds in Aster MIMS Kottakkal. In GCC, 225 beds are being added in the current financial year. This shall take our total capacity in GCC and India together to 5,544 beds. We continue to actively expand the Aster Labs and our pharmacy distribution network in India, in line with our strategy to have wider presence with an asset-light model along with focus on digitalization. The plan is to establish 130 franchisee pharmacies in India during this financial year, which is on track. By the end of the financial year, we plan to
Ladies and gentlemen, the line for the management has got disconnected. Please stay connected while we reconnect the management. Ladies and gentlemen, thank you for patiently holding. We now have the line for the speaker reconnected. Over to you, sir.
Thank you. Sorry for that disconnection. There was some line problem. And so I was talking about the Aster Labs and pharmacy distribution. So 130 pharmacies in India during this financial year. We have already established some 30 pharmacies, so it's on track. By the end of the financial year, we will have 21 Aster Labs and 200 patient experience centers, which again is on track. This, along with Aster Home Care and teleconsultation platform being rolled out, shall give us an omni-channel offering to the people, connecting them to the hospital with a single ecosystem. So that's the whole plan, what we are looking forward to. It is not only the hospitals, along with that, we are going to have this network across, which will help us to have the ecosystem of people coming in for primary to quaternary care. The quarter also saw some other important things like the facilitation for Aster. As a company, we get a lot of awards, and I'm happy that we were honored with the prestigious Harvard Business Council International Award 2021 for dealing with COVID, and also the innovation areas which we took part along with that. There are many other awards that were bestowed on the individual hospitals during this period. While closing, I would like to highlight two things. One, the focus on India. Two, the focus on digital transformation. I've already given you a flavor of the focus on India as a growth market for Aster. It has started paying rich dividends. We have invested significant amount in India and are now beginning to sweat the assets and getting the full benefit out of it. I hope that India will start contributing a much larger share of revenue and profits in future with ramping up of the hospital and the exponential power unleashed by starting of the lab, pharmacy, and other associated things which I described. The second is digital transformation, which is going to have a huge long-term impact on our company. And this is one area we are really focusing. We have started this journey with Bain as our consultants. This will transform Aster into a digital healthcare company in future. I now request the Deputy Managing Director, Alisha Mohan, to talk to you on the digital transformation journey and other initiatives undertaken at Aster. Thank you very much.
I think Alisha is disconnected. Can we try and get her connected again?
Ms. Alisha Mohan, we are not able to hear you.
So I think she's not connected. I'm going to chat with her. She just messaged that she's been disconnected. Can you try and answer that, please?
Sure.
Thank you.
Echoing the spirit of optimism, we've had a good quarter. We continue our pursuit to make Aster more...
Sorry to interrupt. Ms. Mopin, we lost the initial remarks. May you please start?
Okay, sure.
Thank you.
Thank you, Chairman. Good morning, everyone. Echoing the spirit of optimism, we've had a good quarter. We continue our pursuit to make Aster more future-ready and better the experience of patient care. We continue to remain committed to our digital journey. We've been making some very strategic investments in bolstering our digital backbone. On our digital pursuits, we continue working to create our digital assets, which are foundational, efficient, and help us expand quickly in an asset-light model. As I shared in the last quarter, we're investing in creating an app, One Aster, which will be our unified mode of engagement with our patient base for their wellness. This will house teleconsults, e-pharmacy, home health, e-diagnostics, chronic disease management, and creating various streams to support patient wellness. We will be launching the first version of our virtual care app in Q2 at UAE level, and we're actively working on the e-pharmacy build-up. This will mark our omni-channel presence across a wider base of patient care. We will be launching Wave 1 in GCC, followed by the launch in India later in the year. We have hired a CEO to head our digital business across locations. Investments are made to create a digital organization built to sponsor all our ambitions. We have till date invested almost 21 crores in digital investments. Riding on the back of digitization, we've also set up our Aster Global Delivery Center in Bangalore and Calicut, which shared services today houses around 180 employees mapped to centers of excellence in UAE. Early signs are very supportive of our strategic intent of leveraging the human capital in India. We have also had a strong focus on data analysis and digital CRM. So again, looking back at our patient base and seeing what are the necessary services relevant for more personalized care and action. We are trying to enhance and strengthen our patient connect, looking at how we can further improve the patient journey. The phase 1 of our Aster Hospital, Cayman MedCity, has also received the Central Planning Authority approval on its planned area development for the 150-bed hospital. Construction of the hospital should commence soon as well. I will now request our Group CFO, Srinath Reddy, to take you through the details of the financial as well as the segmental performance for the quarter. Thank you so much.
Thank you, Alisha. Good day, everyone. We start the financial year with a relatively better quarter, both in GCC and India. The quarter saw higher patient count in GCC and better hospital utilization in India. For Q1FY22, our revenue from operations has increased to rupees 2,372 crores compared to FY21 Q1 revenue of 1,747 crores. On a year-on-year basis, revenue increased by 36%. And corresponding constant currency increases 88%. In India, the revenues have increased by 84% year-on-year, with occupancy levels of 70%, with outpatient and inpatient count increasing by 42% and 38% respectively. The revenues in GCC has increased by 26%. The outpatient count and inpatient count have increased by 84% and 10% respectively. GCC contributes to 77% of total revenue, whereas India revenue contribution to the remaining 23%. In Q1 FY22, we have reported consolidated EBITDA of rupees 281 crore, an increase of 97% compared to FY21 Q1 EBITDA of rupees 143 crore. GCC EBITDA contribution was 75% of total EBITDA, and India EBITDA contribution was remaining 25%. EBITDA margin in Q1 FY22 was 11.8%, as against 8.2% in Q1 FY21, an increase of around 360 basis points. PAT post NCI increased to rupees 44 crore as compared to a loss of 83 crore in Q1 FY21. PAT for the quarter is after considering one-time charge on account of fair value of consideration payable on home care company acquisition in FY20, amounting to rupees 16 crore, and expense with respect to digital initiatives amounting to rupees 8 crore. This has impacted the non-analyzed EPS. Eliminating the impact of these expenses, the non-analyzed EPS for the quarter would have been rupees 1.37 per share instead of the reported rupees 0.89 per share. Coming to the segmental performance for the quarter, GCC hospital revenue has increased by 23% from rupees 686 crore in Q1FY21 to rupees 842 crore in Q1FY22. EBITDA increased by 27% year-on-year to rupees 130 crore in Q1FY22. The EBITDA margin increased from 14.9% in Q1FY21 to 15.4% in Q1FY22. Last year, same quarter, clinics had a lower footfall due to COVID, which made us reset our cost base. This quarter, the revenue is at rupees 550 crore compared to rupees 356 crore in Q1 FY21, an increase of 55%. EBITDA for Q1 FY22 is at rupees 100 crore compared to rupees 15 crore in Q1 FY21. The EBITDA margin increased to 18.3% in Q1 FY22 compared to 4.3% in the same period previous financial year. We have been seeing an uptick in revenue of GCC pharmacies and also in preparation for the upcoming Expo 2020, certain ahead of time investments have been made in human capital, which has impacted the operating margin during this quarter. In India, we have seen significant jump in terms of both revenue and profitability. Hospitals in India are now reaching mature state, thereby observing improving margins. India's share of revenue to the total group revenue has gone up to 23% compared to 17% in Q1 FY21. Revenue for the quarter from India operations is rupees 550 crore with an EBITDA of rupees 71 crore and a margin of 12.9%. We expect these trends to continue as hospitals attain maturity in India. In India, the vaccination revenue for the quarter was at rupees 31.84 crore. Coming to the balance sheet, the group net debt stands at rupees 2,021 crore as at 30th June 2021 compared to rupees 2,004 crore as at 31st March 2021, which is an increase of rupees 17 crore. The breakup of net debt, India stands at rupees 314 crore compared to rupees 306 crore as at 31st March 2021, and the GCC net debt stands at $230 million, a reduction of $2 million compared to 31st March 2021. On that note, I conclude my opening remarks. We would be happy to give you our perspective on any questions that you may have. I now request the operator on this call to open the question and answer session. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Khemka from InCred AMC. Please go ahead.
Yeah, hi. Thanks for the opportunity. Am I audible?
Yes, we can hear.
Okay. Thank you for the opportunity. So my question is, we are obviously one of the larger hospital chains listed in India, and we are becoming larger with the capex that we are doing in India in Cayman. The problem that I face as a shareholder or as a potential shareholder is that it's becoming more and more complex to analyze the company given the different moving parts that we have. We have 3-4 parts in GCC. Now we'll have a part in Cayman. We have multiple centers in India, and then the digital mission that you have on India. You have the labs, the clinics. And the pharmacy in India. So is there a thought in the management to sort of demerge these businesses to make it simpler for a layman to understand, analyze the business model, and to maybe unlock some potential shareholder value from your, for your shareholders? This is my first question.
Yeah. So that's a very good question. We also understand the challenge, and the last 4 years we have been listed and found that the India investors, the fund managers, as well as everybody for that matter, finds it difficult to understand because it's a complex business. We run hospitals, clinics, pharmacies in many geographies and different types of hospitals, like at least in the UAE. So there is it's a complex business, like what you said, with the increasing, complexity coming into India also with the pharmacies as well as with the labs and all. So definitely, we feel that there is a requirement for us to have some method by which these two are differently looked by the investors. So we are looking at ways in which we are in discussion to have that opportunity to have. See, we know that the business in India is doing very well. That as such, if it is looked by the India investors, will be valued at a much better way rather than when they look at the GCC also along with that. So you have asked a very, very pertinent question. This is on the top of our mind as a priority, and we are looking at ways in which this can be done in the near future.
Sir, for how long has this deliberation been going on inside the company? Because your stock price, you have been listed for 4 years now. Your stock price has pretty much told you that this confusion has been there for the past 4 years in the investor's mind, and they cannot properly value you because of this confusion. So for how long have you been deliberating this? And the reason for asking this question is to get a sense of, when you say near future, are we talking a few months? Are we talking a few years, a few quarters?
Yeah. So we have been, first 2 years after we got listed, we thought that, as you may be aware, all the analysts, everybody were giving very high buy for the stock. They were actually, because they go deep into it, they understand of the stock and they are giving very high. They were actually from the very beginning. It even now continues to a great. But when it comes to the who have to invest, they don't want to sort of, as there are opportunities, especially now with many coming into India. They don't want to look at probably as something which they don't know fully. So that's the reason. So answering your question, yes, it's in the midterm. It won't be too far away, and it's not immediate also. But within next few quarters, I think we'll be able to come to some way in which this can be discovered, the value can be discovered more easily.
And so why would it take us a few quarters? What is it that we are working on to arrive at that decision? What is the hurdle?
I don't want to talk about that now, because this is a matter which we have to now know. It's a listed company, as you know, and we have to. I won't be able to tell, but what I can tell you is that this is on top of our agenda, and we won't take too much time to take a decision and move forward.
Understood, sir. As long as it is top of your mind and it is a top priority, I think your shareholders will really, really appreciate that. Second question, sir, on the capital expenditure that we are doing in Cayman. And, again, so healthcare for chains like us globally is obviously an infinite opportunity, where there is a lot of opportunity for us to open hospitals and to create, affordable healthcare for the patients. However, what we also see is when hospital chains go on expansion sprees like the one you are on, it basically puts a lot of stress on cash flow. Like we can see in this quarter, there hasn't been any material cash flow, despite a very profitable business in the GCC and India business doing well. So the problem that happens when you go on an expansion spree is you stretch your balance sheet, you stretch your P&L beyond a particular point. And that again is something that, the investors are not very happy with, because end of the day, when we buy an asset, we buy the cash flow, and there is no cash flow today because you keep reinvesting what you generate. So what is the capital allocation policy you guys are looking at? Is there an end to this capital expenditure funnel, or is it that we are just going to, keep reinvesting what we make and keep becoming a larger asset rather than a cash generating machine? What is the thought processes? What was my question?
Srinath, you would like to answer that?
Yeah, so I can answer that. So yes, you are right that increasing the capex will definitely put pressure on the balance sheet. But the way we are looking at it is that, you are aware that we are in two geographies, India and the GCC. So in GCC, going forward, we don't want to expand much. our focus is going to be in India. So, but having said that, we would like to have some growth coming from the GCC region. The reason is that it gives us good cash. So one geography which is similar to the GCC market, or I can say slightly better compared to the GCC market, is Cayman Islands. And therefore, Cayman Islands is an extension of the GCC. The project cost for this particular venture, we are looking at various ways of funding it. So it is not that we will leverage the balance sheet. To some extent, we are also looking at whether we can partner with some healthcare player or an insurance player from the US to be part of this particular venture. But having said that, this particular project in Cayman, because there is one of our peers over there who is doing well, and therefore we are confident that irrespective of whether there is a partner or not, this particular project, even though we invest the capital over a period of next 2.5 years, will give us good return. So in GCC, you will not find us investing significant capital going forward, because any capital that we are going to invest is going to be more on the asset-like models like the clinics and pharmacies, which will not take much of the capital. So now the focus is going to be more in India, and the capital allocation in India will be higher compared to the GCC geography. And adding on, it is not that we'll continue with the capital expenditures free. It is because in GCC on the capex side we will be going a little bit slow. India, we would like to continue to add assets, but we will have a balance. It is not that we will continue incurring significant capex. We will have a balance on that.
Understood. Thank you so much, Srinath, for that response. I will just conclude by giving you one remark, and this is my opinion. The highest valued businesses in India have two common characteristics across businesses. One, they are easy to understand. They are simple business structures. They don't have 2, 3, 4, 5 lines of businesses. And two, they are cash generative. Even though the growth may be slightly lower, they generate a lot of cash, free cash flow after capital expenditure. That's something I just wanted to highlight and bring to the management's notice. Thank you so much for your time. All the best.
Thank you very much. Thanks a lot. So that's very insightful, and we are aware, but we will definitely look at both these. Thank you.
We will really appreciate that, sir. Thank you so much.
Thank you. The next question is from the line of Amit Khetan from Laburnum Capital. Please go ahead.
Hi, good morning, and thank you for the opportunity. So my first question is on the margins. Could you give us some sense of what are the long-term sustainable margins for each of the key lines of business? So you have GCC hospitals, you have GCC pharmacy and GCC clinics, as well as the India business. I understand that currently the margins may be a bit suppressed because of COVID and because of many of the hospitals are not yet mature. But could you give some sense of what the long-term margins could be in each of these lines?
Yeah. So GCC hospital. Sorry. Is someone on this answering? Yeah. Okay. Srinath here. So in terms of there is an echo. Would request people to put the phones on the mute who are not speaking.
Sorry to interrupt. Amit Khetan, can you mute your line? It's causing an echo from your line.
Yeah, thank you. So GCC hospitals, we are looking at a steady state margin of around 18 to 20%. Similarly, the clinics, we are looking at around 18%. And pharmacies, the margins, the EBITDA margins will be around 9 to 10%. And India hospitals, at this point of time, we are at 14.3%. But we are confident that this margin in the next couple of quarters will steadily keep increasing. And on a steady state, hospitals in India can have an EBITDA margin of 20 to 25%. But as you are aware, at any point of time, we will be having some projects new projects, which will be a drag on the margin, on the profitability. So on a consolidated basis, India hospital, considering the new hospital, can be anywhere around 17 to 18%.
Got it. And these would be post-Ind AS, right?
Yeah, these are post-Ind AS. Yeah.
Got it. And my second question is your India strategy page, right? If I look at your investor presentation, it mentions that the focus will be on large format hospitals in tier 1 cities. But if I look at your pipeline of projects, you put your Chennai and the Bangalore hospital on hold, and you are expanding in Kolhapur and Kottakkal. So is there a change in your strategy here?
Yeah. So there is no change in the strategy. But if you look at Kottakkal and Kolhapur, these are already our existing hospitals which are already there. And if any addition to the existing hospital will give us better returns in terms of profitability. And both these places are doing fairly well. And we are pretty confident that by adding this, because the fixed costs are already there, so it will give us better margins.
I just want to come in here. So there is a point in what you said. So some time back we were talking about just hospitals, like what I mentioned in my speech. There is a focus now on the other areas to create an ecosystem of the pharmacies, labs, and also expansion of the existing hospitals which already has reached a maturity stage, because it will be straight away increasing the collection which goes into the bottom line. So while we are not aggressively looking at other metros and looking at the large hospitals and metros, because that requires huge capital again. It goes to this question of again bringing in capital. So we are going for an asset-light model till all the assets mature and we are on to that level of ramped up state of 25 to 30% EBITDA in India, which will give us that opportunity to go into larger projects in larger cities.
Got it. And lastly, could you share the July occupancy level for both the India and the GCC hospitals?
Srinath, the July numbers, we will get back.
All right, thank you.
Often,
all the best.
Yeah, we will get back to you.
Thank you. The next question is on the line of Rajat Srivastava from InCred AMC. Please go ahead.
Yeah, hi. Thanks for taking my question. So my first question is on the India business. I see that our new hospitals, which are 0 to 3 years old, they are running at a higher occupancy level than the matured hospitals, that is hospitals which are more than 3+ years old. And the ARPOBs also are higher, right? The ARPOB for new hospitals is around 32,000 rupees, while for mature hospitals is around 30,000 rupees. But still, when I look at the EBITDA margins, the EBITDA margin for new hospitals is around 10%, and for the matured hospitals is around 17%. May I know why is there a difference between the two? Like, where is the headroom for expansion in the EBITDA margins going ahead in the new hospitals? Because occupancy levels of 75% in any which way is a very good occupancy level to have.
Yeah, Rajat, Dr. Harish here. So when you look at this, the 3 assets which you said is ramp up, so 2 of them are in Bangalore and 1 is in Kannur. So when the first question you asked is about occupancy level, so the Kannur project has been extremely unusual that it's at peak occupancy that we have almost run out of beds in comparison to the Bangalore unit. So that is why when you look at overall the occupancy level of those 3 assets, look at 75% in compared to the rest of the mature units. Now the other question is to do with ARPOB. So the ARPOB of the 2 Bangalore assets are much higher compared to the Kannur assets. So when you look at that, the category of 3, it just looks like that the ARPOB of the cluster of 3 units is much higher than the other units in India. So yes, the third question is in terms of margin improvement. So these the 3 units are just settling down. In terms of like I spoke about the Kannur units, because now the entire focus is on cost efficiency. So we will be realizing the results in the couple of quarters coming up. One asset which is already there in Bangalore, it's really settled down well, so that's coming up. Whereas the Whitefield unit is brand new, so it's just ramping up. That's a small boutique facility which we built for women and child. So so yes, in the next few quarters, the margin improvement in these three assets will be much more than what it is right now. Thank you.
Okay. And sir, internally, what is the peak EBITDA margins you are looking at for the India hospital business?
So this question was answered by the CFO earlier. At a steady state, we are looking at consolidated India business at about 17%. That's mainly because, as I mentioned, we have the three assets already there, which are in the ramp-up stage. But if you look at individually at the mixture, the cluster what we have in the mature hospitals, it is at high teens compared to the others. So overall, it will be steady state, maybe around 16 to 17%.
All right. And so just trying to understand the India business better. May I know what was the thought process behind Aster DM targeting tier 2 cities first and then moving to tier 1 cities? Because from what I gather is getting good talent in tier 2 cities like good doctors is very hard, because good doctors, like the star doctors, generally prefer to stay in tier 1 cities. So what was your thought process behind, going after tier 2 cities first?
So when you look at the evolution of the growth in India, the first asset which we had was the Calicut Hospital, which is the Malabar Institute of Medical Sciences. And we are currently the largest players in the state of Kerala. Now, the ecosystem in Kerala is that being India's most literate state, the availability of healthcare workers in this state is so high that it's a net supplier of healthcare manpower to the rest of the country and even overseas. So we have never felt that kind of crunch where the state of Kerala is concerned. The other example in terms of tier 2 is that our asset in Kolhapur. Now, Kolhapur is also pretty interesting socioeconomic mix, that it is also one of the richest districts in the state of Maharashtra, with its own availability of locally based healthcare workers. So we have not really faced manpower crunch in the geographies where we operate right now.
All right. So one last question from my side. In the results press release, we mentioned unallocated assets of around 1,000 crores. May I know what is that attributed to?
Srinath?
Yeah, so just give me a minute. I'll get back on that. Just give me a minute, please. We'll go to the next question. After that next question, I'll be back.
Sure. Yeah.
Thank you. The next question is in the line of Shyam Srinivasan from Goldman Sachs. Please go ahead.
Hi, thank you for taking my question. Just the first one is on, the EBITDA margins for India. I see two, three numbers, so maybe I can clarify. So on slide 22, we are showing 79 as EBITDA. If I look at the previous slide, I think previous 12 or 13, I think you're showing it as 71. So what's the right number? And is it a function of the labs and the clinics being added in one and not in the other? If you can clarify. Thanks.
Dr. Hari?
Yeah, so that the one number when you looked at the 79 crores, that is before the corporate expenses in India.
Okay. But it also includes losses from the clinics and lab, or is it no profits? I'm just curious. Yeah.
Yes, because some of it is our clinic presence is rather small, but yes, clinics and the labs are also included because they are in the startup mode, especially the lab.
Got it. And Dr. Harish, when we say 17%, assuming this 14 goes to 17 pre-corporate overhead expense, that's where we should be looking at, right?
Yes, that's right.
Okay, got it. That's helpful. Dr. Harish, again, second question, just on the state of the pandemic in Kerala, right? Any thoughts around the high persistent numbers, and what are you seeing in your hospitals? in terms of, is it a variant? Is it a different variant? What explains this? Kerala also has one of the toughest lockdowns. So from your experience, what do you think is happening?
So, Shyam, this is actually a classical case of misinterpretation and misreporting in India. I'm honestly quite disappointed at the quality of media that we don't have a cadre of epidemiologists who assess data. You see, the fact of the matter is that if you look at per 1,000 people from a population statistics point of view, the state of Kerala is testing much more than the rest of India. Obviously, if you test more, you will pick up much more cases compared to any other state in India, number one. If you look at the ICMR zero prevalence survey, it is clearly shown that the level of infectivity of the entire population is much lesser. It's around 43% even if you look at it on a pan-India basis for Kerala. And even the population group which has turned positive, it's all to do with vaccination. So if you look at right now the state, the actual state and the status on the ground is that it is quite, life is almost as normal. Like this next week, Onam is going to be there, and the kind of calibrated strategy which they are following, the state government, it's all to look at resuming of economic activities and also looking at micro lockdowns, looking at where is the concentration of a pandemic cluster and focus on zoning that area off rather than on a pan statewide. So we are quite comfortable because interestingly, when you look at hospital occupancy data of COVID, it is more or less in line with what we spoke about during the second wave, which was in Q1. The occupancy of COVID numbers was quite high. Then post Q1 in the month of July, the occupancy of COVID numbers came down, and we are following the general pattern. It's just that because the testing is much more, the public infrastructure in Kerala is probably the best in the country. And that is why you're finding these numbers, which unfortunately are wrongly interpreted.
Got it. Dr. Thanks for that. And I needed one last data point on the India side. What's the revenue we have got from vaccinations?
So this was already mentioned by the CFO. We had already clocked in a revenue of 31.84 crores. This is looking at an administration of 380,000 doses.
Okay. So the 559 includes the 3132 crores.
Yeah, 550 includes that, yes.
Got it. Thank you for all the questions on the India side. Just one last on DCC pharmacies. Right, we have called out for about 10% margins aspirational, but I'm just looking at growth also. Of all the 3-4 formats we have, it seems to be the one still underperforming. I'm just looking at a 2-year CAGR. Even YOY this year is the slowest growing of a very weak base. So are we done with all the restructuring and the changes that we have been doing here? And when will we likely see higher growth and better margins in these pharmacies?
Yeah. Alisha, you would like to answer that? Regarding GCC?
Sure. Yeah, so you're right. We have been having a little bit of a slow growth in the retail, especially on the pharmacy side. But like what Chairman had mentioned in the opening remarks, we are seeing sort of footfalls coming back and kind of getting restored back to 2019 levels, even at the pharmacy right now. So we're pretty much at that level. And sort of the estimate is that by the end of this financial year, we would be able to see again healthier CAGR and footfall growth is coming up. And as I mentioned on the digital CRM, we are doing a lot of activations just to make sure that the connection between the hospital, clinics, pharmacies will sort of drive footfalls. We've got the expo coming up, so we're quite positive about what the next 2-3 quarters will look like. So we should be able to see a different trend than what we have seen over the last 18 months.
Got it. Thank you and all the best.
Thank you. The next question is on the line of Anmol Ganju from JM Financial. Please go ahead.
Yeah, hi, thanks. So I have a couple of questions. If you look at the GCC pharmacy revenues, Now, what do you attribute the sharp sequential fall to? 35%. Have you guys been losing market share to e-pharmacies, or there is something else at play here?
Yeah. So the large fall.
Hello.
Hello, Miss Alicia Mopin. We are not able to hear you.
I think she got disconnected. Can you connect her again, please?
Yeah, sure.
Or Amitabh, you can take that.
Sure. So, since you asked the question about the sequential drop in revenue, the quarter one for this financial year has the Eid holiday. So we pretty much had a 7 to 8 day downtime, which leads to a slower footfall in this period, and people go on vacation, and as a result, the revenue takes a bit of a beating in this quarter. Historically, also, this has been the same trend. But as of now, we don't see a challenge about the upcoming quarters because we've seen the footfall gradually rising over the recent past.
Yeah. So basically, I was trying to, correlate it with Alicia. Alicia's opening comments, where she said that, we're looking to do omni-channel and e-pharmacies. So just two questions just tied into this. One is that from a market landscape standpoint, are you seeing a fair acceleration for e-pharmacies, and therefore the digital initiatives are to protect the existing market share, especially in the GCC markets, or it's just you're trying to play catch up, or there is a real e-pharmacy focus where you think you can reasonably create value in line with what's been happening elsewhere? And does India anywhere stand in that picture of e-pharmacy rollout of an omni-channel or a pure play e-pharmacy model?
Sure. Yeah. So let me try and answer that. So on the e-pharmacy side, we do believe that there is a need of an omni-channel, and Aster has a unique advantage because we have clinics, we have hospitals, and we are also actively trying to get into diagnostics. So an omni-channel where we can provide both primary and the tertiary care, as well as provide pharmacy support through a same app, is something that is perhaps the way we can create more opportunity of customer care for ourselves. We do believe that there is an opportunity sitting over there. There is a brick and mortar plus, as we call it, brick and click approach, where there is pharmacies which are on-site pharmacies, as well as the digital model that will allow us to engage more with our patient base. That was an answer to your first question. On your second question, yes, there is an active plan to take the e-pharmacy to India also, because here again, we are trying to expand pharmacy base, and that pharmacy base will be complemented by an app where both the pharmacy as well as the e-pharmacy will coexist to provide the retail for pharma and the non-pharma supplies to our patients.
I just wanted to add here, you asked a very pertinent question. So we are not playing a catch-up game in GCC. In GCC, in fact, there aren't too many players into the pharmacy space, whereas in India, yes, there are established players, and what we are doing is that we are coming with physical pharmacies and adding e-pharmacy onto that. Whereas here, we have an established chain of physical pharmacies, and we want to leverage that. In fact, we are in discussion with many of the major e-commerce players to be along with them, as well as starting our own activity in the same area to get that traction. So here there's a definite advantage of being in the forefront when it comes to e-pharmacy.
Right. Would you have any number as on to what the e-pharmacy penetration in GCC or the representative markets today is versus what it was pre-pandemic? Because in India also we've seen a fairly sharp acceleration in that penetration. So just curious in terms of how various markets are behaving.
Yeah, I won't be able to tell that. Alicia, are you there?
Yes, Chairman. Sorry, I'm back. So, like what Chairman and Amitabh mentioned, we do have a unique advantage. We are the only one players who's able to kind of close this loop on clinical services as well as on the pharmacy. It's not been as accelerated as we've been seeing in the India landscape. So we do have, we're probably much ahead of the game here. We already have almost 8 to 10% of our orders that are coming through some sort of digital form, whether it is online, whether it is WhatsApp, whether it is a phone call. So some sort of technology intervention that's happening. So we wanted to make sure we continue to take that market leadership and then build on this asset and then bring it across to India. Perfect. But we don't have the exact percentage of what the e-commerce one looks like, but it's not very intense right now, so we wanted to make sure we continue leading it.
Yeah. My second question is around diagnostics. So that's again a piece that you've been talking about, and as a value creator, just wanted to understand what are the key monitorables here, where are we in that journey, and what's the game plan here with any defined timelines as on to when we see a scale up in that business to be called out separately.
Dr. Harish, you would like to answer that?
So, as you know that we have already, our model in India is fairly simple. We went about establishing a state-of-the-art reference lab in Bangalore, which covers most of the basic bread and butter specialties and also added up with high-end specialties. We were quite fortunate that Q1 2020, our reference lab was one of the first in the state of Karnataka to get both ICMR and NABL approval for RT-PCR testing. So that ramped up quite nicely. Now we are looking at genome sequencing and how we can participate in that. Parallel to that, the lab team also looked at consolidating the existing labs within the hospital, what we call as HLM ventures. And at the same time, of course, the strategic outlook was parallel to look at B2B and B2C models, where we can look at the non-Aster opportunity which is out there. So following that track, we had established satellite labs. Already we have 4 satellite labs, but the big focus is bottom of the pyramid, what we call as the patient experience centers, and this is already alluded to in the chairman's opening remarks. So we are currently looking at this fiscal of a big bang approach to increase the number of franchisee centers across the network so that we can sweat the assets both in the reference lab and also the main units what we have. The number what we are targeting this financial year is 200 patient experience centers. So I feel that this kind of it's a pretty simple and an elegant strategy. It will really help us not just consolidation but improve margins significantly in this space.
Right. So I would love to have further details on that in terms of 200 experience centers. What's the revenue outlook with respect to that? I know it's slightly early, but we can probably take it offline in terms of how's the rollout looking like. My last question before I get back into the queue is. Hello, am I audible?
We have a person joined who is from the SRL labs and who is driving this. His name is Anandya Chaudhary, and he will be available for any, if you would like to get any of that time, so we can connect definitely.
Perfect. Thank you. That's helpful. And my last question is on the India hospitals. So basically, if you were to triangulate all 3 variables, loss, ARPOB, occupancy, with the current installed bed capacity and with no major capex, how much can the quarterly run rate ramp up by relative to this quarter? I know that for individual hospitals, there are idiosyncrasies, and you might not be able to share things for competitive reasons also. But how much of a quarterly run rate upside do you see to current numbers?
So let me put it this way that, obviously I wouldn't like to make a forward-looking statement, but if you look at our occupancy levels for Q1, it's already at 70%. And out of that 70%, yes, we had a share of COVID occupancy also. But when you look at Q2, the ramp up of non-COVID business has been quite significant across the geography. So we are looking at looking at a similar kind of a steady state performance of what we saw in quarter one, despite the COVID numbers coming down in comparison to quarter one.
Hello.
Am I audible? Did you hear what I said?
I missed the last sentence.
So what I said is that even though the COVID occupancy has come down from quarter one, there has been a significant ramp up of non-COVID business across the geography. So we are looking at a steady state performance on par with quarter one, where the margins will look better because obviously COVID impacts a certain case mix and the material consumption due to COVID is much more. When the COVID numbers relatively come down, the margins will also look relatively better.
Thank you. That's really helpful. That's it from my side, and all the best.
Thank you. The next question is from the line of Harith Ahmed from Spark Capital Advisors. Please go ahead.
Good morning. Thanks for the opportunity. My first question is on the GCC clinics business. So just trying to understand the recovery here, excluding the RT-PCR revenues. So the OPD volumes here is what % of pre-COVID levels currently? And then we've heard that in certain specialties like pediatrics, which is very important for the business, the volumes were low in the previous few quarters. So how are things shaping up here?
Harith, I'll take that. So we've seen some recovery on the clinics, which has happened primarily because of the RT-PCR, but also when you look at the profitability, a lot of them have been the cost optimization measures. When you look at the footfall volumes for this quarter, what we're seeing is where it had dropped down to almost 40%. Now we're probably just 15-20% below as far as Aster is concerned. It's been a little bit more steep in terms of footfall reduction in access, just because that is the population that had shrunk in the market. But again, with the expo coming, we are seeing sort of it's also been a little bit of a challenge because the borders are being closed to India. So now again, we've seen the relaxation of the travel restrictions. So our assumption is that the population on that base of the pyramid, which had dropped during just at the wave 1 and wave 2 of the COVID, will get restored in the population, and we will be seeing an increase in the access. So to Aster levels, going back to your question, things are pretty much 15 to 20% only below what it was, and we're seeing a steady climb, especially this quarter. And we expect the access numbers also to sort of come up in the next couple of quarters.
Okay. And on the pharma distribution side in India, we recently announced an acquisition of a small entity here. So can you talk a bit more about our plans here, and should we look at more addition of distributors and front-end stores on this part of the business?
Dr. Harish?
Yeah. So we have, as announced to the stock exchanges, we have acquired an existing player in the Bangalore market, which has already been supplying to our Bangalore cluster hospital. So there is already an existing relationship with them. So the way we are looking at is leveraging their USPs and know-how in the supply chain logistics space to extend this not just to the hospitals but to the growing retail activities, both in the diagnostic space as well as in the pharmacies. So we are working closely with them to extend their geographies beyond Karnataka to Kerala and other places. So this is something which is a work in progress at this stage. There is also a technology bit where we are also looking at, there is an ongoing ERP integration work which is happening both for finance and supply chain. So we are looking at efficiencies brought in, which will also improve operating margins for the larger business through this activity.
Any targets in terms of number of stores that we would like to have from a 2-year or 3-year perspective on the pharmacy side?
So for this fiscal, we have already announced 130, of which, as Chairman has already alluded to, we have already have 30 stores which are already operational in the Bangalore cluster. And in phase 2, we are entering Kerala, after which we will go to other parts. So we are only entering geographies where there is a certain brand equity, and that is what Chairman's opening remarks were, that the strategy for India is to unlock value through an integrated care delivery platform, which will connect hospitals, clinics, diagnostic chain, the pharmacy, and home care. So that is what our GCC CFO Amitabh also alluded, the click and brick model of healthcare.
Okay. And last one from my side on Cayman. So what are the timelines we are looking at in terms of commissioning our hospital here? And your peer in India who has had a head start in this geography, operating a hospital for the last 4 or 5 years, they've announced expansion and that should be online by next year. So how should we think of the competitive intensity here, given it's a small market, even if we include the neighboring Caribbean islands? So what are your thoughts on this?
Alisha, you would like to take that question?
Chairman, I think Alisha has just connected. Srinath, can I request you to take on?
Yeah, no, I can then answer. So we know that the plans of our peer group who are there. So we were aware about it even when we went in. But we see an opportunity to be slightly different from what is being done by whoever is presently doing the business there. So it's not for the local crowd, the Cayman. We are looking more for getting patients from US. It's a huge opportunity. So that's a huge opportunity that attracted us to Cayman. It's not the Cayman assets or the Caribbean island. It is the mainland US as well as other places like Canada, which has got significant potential. So our whole focus, we have already started strategizing for getting patients from those geographies, and it will be very easy to fill up the hospital as well as to get good revenues and good profits if we are able to make it successful. So that process has been started. In fact, we have in our senior functionaries taken people who have exposure to this and who are presently in Aster working for the corporate in areas like service excellence as well as in areas like digital transformation. The person who is in service excellence, David Bosher, has been a CEO of many hospitals in US as well as he has been the head of service excellence for Brahma Grant Hospital in Bangkok. So he is looking at how medical value travel can be made to India as well as to our GCC hospital, and later when he goes once the hospital starts in the Cayman, where to Cayman. So answering your question, Harit, the idea is to look at patients who can be attracted from the mainland and look at specialties which are more pertaining to that requirement. That is what we are looking at.
Got it. Thank you, Doctor. Thanks for taking my questions.
Thank you. The next question is on the line of Monica Sharma, an investor. Please go ahead. Monica, your line is in the talk mode. Please go ahead. Monica, your line is in the talk mode. Please go ahead. As there's no response from the current participant, this was the last question. I now hand the conference over to the management for your closing comments.
Yeah, 1 second. Before the closing comments, there was a question related to occupancy for the month of July. In India, the occupancy is at 65%. In GCC, it is at 50%. And there was another question related to unallocated assets in the control statement of 1,050 crores. So this relates to the Sharjah Hospital, which is in the UAE, so which is still under construction, and also relates to the land, which is in India, which is in some of our companies, which is not directly linked to a hospital. So in fact, we are looking at monetizing some of these lands, which are in the management company, various companies. So that is one way of monetizing those assets. And also the tax assets related to the advanced tax and deferred tax also forms part of it.
Thank you. Thank you, Srinath, for clarifications. And thank you, everyone. Thanks a lot for very active participation and the very good questions. And we look forward to meet you for the next quarter and hope that the business will look up. And we have taken your suggestions as well as very positively your questions. Thank you very much. Thanks a lot.
Thank you. Ladies and gentlemen, on behalf of ICICI Securities, that concludes this conference call. We thank you for joining us, and you may now. Ladies and gentlemen, on behalf of ICICI Securities, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.